Hi traders, so today I'll be recording a market breakdown. It's currently Sunday, it's 3 o'clock. I'm not sure whether it's in the morning or it's still midnight, but then it's 3 o'clock. So on screen I have the dollar index known as the DXY. So in most cases, the reason why I actually start to analyze the market and the dollar index is that I want to actually see the current movement of the dollar. So in most cases you find that I start to analyze on the higher time frames. So let's just jump to the video. So as you can see, I'm on the weekly time frame, meaning that on the weekly time frame, what I actually like to do is that I like to highlight my higher highs and my lower lows of the weekly time frame. And if you can see here, this is my higher high and this is my current market lower low. So price actually is moving in a what? It's moving in a downtrend currently. So in most cases what I like to do is that after highlighting these two zones, sometimes you might find that they are not only two, because when you go to the lower time frames, then that's when you start to have those nice higher highs and lower lows. So I'll move to the daily. Then when I get to the daily time frame, this is what I'm currently looking at. Please bear with me, guys. I have flu. I have a young fever now, so please bear with me. So yeah, as you can see, we're on the daily time frame. So currently, what I'm trying to look at is that I'm trying to determine the direction of the market by actually doing what? By looking at previous higher highs and previous lower lows. So if you can look here, we had this previous high and we had this previous low. But then I'd like to, yeah, this one over here, because, and I will explain why I'm choosing this one over this one. So here, the scenario is very simple. I won't say it's simple. It's simple when you know what you're doing, but then if you are still learning, you might find that it's hard. So let me just explain why I've highlighted these two zones, but they might not actually work on what's going to happen in future, meaning what's going to happen when the market opens. So I can see that this was the high value area. Why am I saying so? Because it was a current higher high and it failed to break here. The first time the market came here, it failed to break. As you can see, it created this gap, meaning that if the market created something like this, chances are we still gonna do what? We're still gonna come back on this higher high. We might not come back instantly, but then when time goes by, you will find that we are just creating patterns so that we can actually manifest to the desired high, which is this one. So one thing I liked about this high is that price didn't actually shoot here when it actually came from the zones. It actually created this gap and it created this gap over here, meaning that each and every gap that we create, we have to fill. It's like a void. You get my point? So price didn't break here, went down, came back up, and what I liked about this time is that it gave me a pattern, meaning now the probabilities are now starting to increase. It gave us this ascending pattern or a reversal pattern. So it gave us this reversal pattern over there. Then we could have got something like this. I want to explain this on the higher time frame so that when we get to the lower time frames, then we already know what we are doing. Because trading it's about actually applying the same things over and over again. It's about mastering the basics to an extent whereby you can just do it even if you don't feel like doing it. You just have to practice the basics over and over again. So here you've spotted this pattern, you've broken out of this pattern, and it created some kind of like a correction after the break, meaning that if I can zoom in, that's when you're going to see the pattern that I'm talking about. I actually want to touch on this because I want to understand the reason behind this huge sell-off. So the reason behind this huge sell-off was that price created the gap which we have to feel. We might not feel now, but then we're gonna have to feel it later. Because if you can check, we are still on the daily time frame, but then we can see that the gap was not actually triggered. When did the gap get triggered? The gap got triggered after we created this pattern, and after the complete of this pattern, like price came, trapped traders on the wrong side of the market, meaning that most of people thought that once price touched this zone, this important area, then we have to sell off. Sometimes it does sell off, but then sometimes we have to get clarity, which is a good confirmation, and not just a good confirmation, but a solid confirmation. So after the tap here, price pushed down, trapping traders at the wrong side of the market. So in most cases, you'll find that we might feel FOMO when price starts to do something like this because we don't want to get left out. So in most cases, price would have shot down, but then this time around, look what happened. Price actually bounced here, but then we don't know why. Then let me explain why we actually got the bounce here. If you can actually take a good look at this first touch and connect it with this second touch, that's when we're going to get this third touch. Actually, this was our confirmation for it. Now this is time to buy, not actually time to sell. But then I was not actually going to take those long buy because this was a short term buy. Then price did what? Price created this first touch, second touch, third touch. We know that a third touch is what has the highest probability of selling or buying. So because we are moving up and now price is actually bouncing uh, on this trend line, then this means that we are doing what? We're actually creating continuations. Then another confirmation would have been this retest over here, meaning that price broke out, then came and retest on the zone. So we move to the what? We move to this zone now. So now price does what? Price breaks out, actually forms a false break. Then look what happens. It pushes quick back up. But then what I liked about the push back up is that this push back up was actually anticipated in terms of we can actually see the candlestick formation over here that we actually created something like I don't know this candlestick name, but then it was a rejection candlestick. We rejected with this candle, and one thing I liked about it was that it was a solid rejection. And once price does something like this and fails to break out with an impulse, then this gives us clarity that price can now do what? Price can come back and actually come and sit on the zone and retest on it. Then look what? It gave us a sniper entry. Mind you guys, the reason why I'm actually doing this on the daily time frame is because I actually want to emphasize the fact that trading is about basics. What I'm actually applying here is actually what I'm going to do when I get to the lower time frames. You get my point? So that was the reason why we actually got this huge sell off on the DXY. So now let's move to the current market price. So right now I'm moving to the current market price. So let me just remove this line so that I don't get confused, because sometimes they do happen that you get confused with these lines. That's why I like trading with a clean chart. So yeah, right now I'm now focusing on the current market price. I'm now moving down. Then look what's going to happen. I'll just highlight this with the arrow so that it doesn't get messy when I get to those lower time frames. But then it's fine. It might not be perfect, but then as long as I know that this was where the market actually created a low, then this actually holds a lot of value when I get to the lower time frames. So what I'll do right now is that I'm on the daily. I highlight my high again, my current high. It's this one, and my current low. It's now this one. Meaning now I'm not trading within the zones. Then I move to my 4 hour. When I get to my 4 hour time frame, that's where the price action start starts to get applied. So now I'm applying basics. I'm now applying what I've been doing on the daily time frame. I'll be spotting out my patterns, my reversal patterns, and your continuation patterns. So this was the reason why we sold off. Price did what? Retested on this previous low over here, forming what? Forming this pattern, this reversal pattern that we were talking about. So in other words, this is now a what? This is now a continuation pattern of this previous high, of this previous high, no, previous low. Then we've broken out of the candle, of the trend actually. We've now broken out of the trend. Then look how price is starting to move. We create another point of interest. We created another what? Another value area. This was a value area because we broke out. Then we know that once price breaks and actually leaves this as a low, chances are price will come back and retest. Then look what happened. Look what happened. Price actually did come and actually retest. We retest, then we sell off. So right now what I'm trying to find out is that are we actually going to re, to reject here, or are we actually going to form continuation patterns? Let me just remove this. So now I'll be having something like this. Then I I have to highlight again, highlight this one, because chances are it's always the basics. What happened here is actually what happened here. If you can look, let me just highlight it properly. As you can see, we are retesting from this previous zone. We've retested here. Why? Because of this previous zone. Now price is here. Are we going to retrace here? Or is price going to do what? Is price going to actually form continuations, or possibly price could push back up to that retracement candlestick that we actually have here? Chances are we might actually get there before the sell-off, because we are here at this previous low. Chances are that might happen. Then I move to my 1 hour. You don't have to complicate trading. The more the chart is confusing is the more you're going to blow. I'm not saying that I don't blow accounts or what. I won't say that I don't blow accounts. But then the more I keep things simple and I keep the basics simple, then surely good things will follow. Then I have to highlight again. This was a nice correction over here. Then I actually prefer highlighting this one like this because I don't want to get confused. Then we have something like this. So if price actually does what? If price can come back, retrace somewhere around these zones, then I can take my sales. I can take some pending orders here. And the 1 hour time frame, mostly I use it for management and for execution. That's why I don't actually like playing on the 5 minutes and 1 minute because these two are for fundamentals. From the experience that I've just got on trading over the years, I've seen the lower time frames most of the times are used for fundamentals. And if price fails to retest here and actually breaks above, I will actually look for it here again to actually sell off here. So basically this is how I actually analyze the market. I don't actually complicate things. Then yeah, that's how I'm actually seeing DXY. So let's see whether this thing corresponds with other dollar related pairs or metals. So I'll be moving to the Dow Jones now, which is US 30. So look what happened on US 30. Sorry with this because I've actually analyzed the market before. So this is actually what I'm looking at on US 30. Look, we actually did sell off, but then we created what? We created this descending pattern or reversal pattern. So on the 4 hour, then this is what I have. So I'll be targeting this high over here. But the only time where I'll be looking for entries, it's only when price does what? It's only when price breaks out because I like trading reduced risk entries more than risk entries because when I'm trading risk entries, it's like I'm gambling. But then when I'm trading reduced risk entries, like it's like I'm in motion with the market because the moment market breaks out, I know that okay, sharp, we've now broken out. I have to wait for what? For a solid retracement candlestick or for a solid retest either on this zone for me to actually buy. Or if price does what? If price breaks below, then I know okay, so right now we are no more looking forward for bullish movements, but I'll be looking for bearish movements. So yeah guys, that's how I actually look at the market. And I'll actually be dropping another video of how I actually forecast and how I actually execute the market. I think maybe tomorrow. And yeah, stay tuned for more market forecasts and more market insight videos. And these videos are not for investment purposes. And I actually don't offer signal. I don't offer signals because I'm actually trying to learn my strategy, and I'm trying to understand them more and more. So guys, we'll meet on the next video. I hope you enjoyed this one, and if you enjoyed it, hit the like button and don't be scared to subscribe so that you can get notified when I drop another video. So yeah, See you on the next video. This was Growth FX. Learning never stops.